It's been an interesting week for crypto. Bitcoin rallying yesterday, topping $25,000 a token and hitting a 9-month high in the process before slipping today. Bitcoin right now around $24,500. Here with the latest on the crypto market is Yahoo Finance's reporter David Hollerith. Silvergate, David, and Signature were two major banks for crypto companies. What does all of this mean for the sector to no longer have those banking partners?
Hey, Inez. Yeah, it's definitely something that we're still watching and observing at this point. Things got pretty hairy on Friday. Bitcoin fell below $20,000, and focus really went to Circle. Circle is the issuer of the second largest stablecoin, USDC. USDC dropped on Friday, or it started dropping on Friday once it became clear that one of Circle's key banking partners was Silicon Valley Bank, and they later disclosed about $3.3 billion with the bank. So that sent the stablecoins price plummeting, and stablecoins are supposed to be pegged to the dollar as much as possible. And when something like this happens, it can spark a run, and that was definitely the concern over the weekend. Circle stepped in and said that they would pay any shortfall from the losses at Silicon Valley Bank. And since starting then, and also with regulators saying that they would, the FDIC would repay uninsured depositors at Silicon Valley Bank, we saw the stablecoin return to normal. And after that, leading up to the inflation report yesterday, cryptocurrencies spiked. I think at certain points, I guess you could say on Monday and Tuesday, we saw about an 18 to 20% gain each on the day. But by the end of Tuesday afternoon, yesterday, all of that had basically cooled off. And on the day for Tuesday, Bitcoin was pretty much flat, which is interesting. So it's extremely volatile. And I think getting rid of these banking partners means that there's a lot less, crypto market's more isolated than it's ever been. So it's a lot harder for people to get dollars into crypto and crypto into dollars. So in some ways, it might sort of perform on its own. And we've seen that a little bit with Bitcoin. It's still correlated to the NASDAQ. That's sort of a story over the last year has been about how much it performs like a technology stock. But it's performing less so over the past couple of days. Actually, since January 1st, it's been sort of on a downward slope in correlation that we've seen. So we're going to continue to watch that and see if it continues to decouple or if this is just a momentary trend and it begins trading again with stocks.
And David, have you seen signs that crypto may have played a role in the failure of these banks?
Yeah, I mean, I think that there's Silvergate, Signature, and Silicon Valley Bank, and I think with Silvergate, that was pretty clear that most of their crypto depositors, or about half of their crypto deposits, were pulled out during the FTX collapse. And Silvergate had to pay back those depositors using bonds to sell. And those bonds obviously sold for less. And Silicon Valley Bank had the same situation, except their depositor base turned out to be more what we would just say tech startups in general. And then Signature Bank, too, is kind of in a unique position where it's not become abundantly clear about, what risks they were at, given the bank runs that had come before them. But obviously they were closed on Sunday. And so I think that with each of these banks, it's a little bit different. I mean, it's pretty clear at this point, though, that crypto businesses are a slightly more volatile depositor base. But we haven't really seen as much as we would think, when things break, sort of crypto being the first to break and it, bleeding into the financial system. That being said, Silvergate did take loans from the Federal Home Loan Bank, and that is obviously, a direct connection there. So,
Yahoo Finance's David Hollerith, thanks for joining us.